Many people in the US think the mortgage market is broken, and they're probably right. Mortgage rates are rising and aren't slowing down. First time in a long time, mortgage rates are over 5%, and property prices are increasing. Most people estimate mortgage rates will reach 7 to 7.5% in 2 or 3 years. Mortgages are secured loans used to acquire real estate. Zillow reports that 63% of American homeowners have paid off their mortgages. Every percentage rise in a mortgage rate rises monthly payments, particularly for low-income households. There are economic reasons to raise rates, but this is bad news for home buyers. High mortgage rates aren't the only obstacle to home ownership, say experts. Our economy and mortgages haven't changed in 50 years. If we adapt our system to better serve everyone in America, it will dramatically advance us in establishing a more egalitarian society. How do mortgages make American house ownership harder? And can anything be done to fix it? The price of a house generally surpasses the amount of money that most Americans save. Mortgages enable people to buy a property with a little down payment and a loan for the rest. Cost is a problem. America has an affordability dilemma. COVID highlighted and aggravated an existing situation, but it's worsened. So we have a supply and affordability dilemma. Americans must take out bigger mortgages now. A median income family would spend 34.9% of their annual income on a medium-priced home, according to the Federal Reserve Bank of Atlanta. According to HUD, families paying more than 30% of their monthly income for housing are cost burdens. Cost is another why many renters question whether they'll ever be able to buy a home. Even condominiums and townhouses are costing $500,000 and higher, increasing mortgage loan down payments. Saving for a down payment is a home ownership obstacle. An average worker needs 8 years to save for a 3% down payment on a median price house and 30 years for 20%. While FHA loans allow for lesser down payments, a large down payment has a significant perks. With a large down payment, mortgage approval is easy. Mortgages are cheaper. 40% of American households have no financial cushion. They couldn't pay a $400 debt or challenge. So a 20% down payment is unthinkable. Food and energy expenses are rising worse than ever. Rents are rising faster than salaries. These things prevent households from saving for a down payment. Several state and municipal colleges provide down payment assistance programs. These down payment schemes need funds. The programs aren't standardized, making lenders hesitant to utilize them. It makes them harder to find and harder to qualify for. The Senate failed to pass a package of down payment aid for first-time home owners as part of Build Back Better last year. We hope it will be resurrected. Another problem is the unavailability of sub-$100,000 mortgages and loans. Smaller mortgages are significant since they're affordable for low-income families. Small dollar mortgages are accessible for first-time home buyers in urban, suburban, and rural areas. It's getting worse. From 2011 to 2021, the value of home loans between $10,000 and $70,000 and $70,000 and $150,000 fell by 53% and 21%. In the same time, loans above $150,000 surged 240%. Lower homes with smaller mortgages are harder to finance. They're also pricier. Small dollar loan refusal rates were greater than for bigger loans, according to another research. These loans aren't risky. Small dollar loan applicants have comparable credit profiles to large dollar loan applicants, according to studies. Why? Profit. Regardless of the size of the mortgage, it costs roughly the same to process an application, finance a mortgage, and have it assessed. So a $700,000 mortgage costs the same as a $70,000 mortgage, yet I receive fees and interest dependent on the loan amount. On a $70,000 mortgage, I'll make less than on a $700,000 mortgage. Lack of small dollar mortgages forces individual investors to buy cheap houses. Small dollar houses that may be a family's first step to home ownership aren't being sold with mortgages. Therefore, they're presumptively being purchased with cash. Someone with vast money may donate cash. They acquire properties using automatic systems without seeing them. They acquire an automated assessment, a remote inspection, and purchase properties in bulk, taking a lot of smaller, less expensive residences from an already limited affordable housing market. So tight access to small dollar mortgages does much damage. In reaction, home buyers may use unscrupulous means. People often find up in contract for deeds, where they rent and ultimately buy the home provided they complete their loan payments on time. You lose the home and have no equity if you skip payments. There are millions of these trades today because there's no alternative. They're forced into mortgages. It's also harder to get a mortgage. The Housing Credit Availability Index has stayed almost unchanged since the 2008 financial crisis. Since the foreclosure crisis, lenders and investors have been reactive with their underwriting requirements. Low credit score borrowers are disadvantaged. As millions of homeowners entered mortgage forbearance programs, banks upped their borrowing conditions. Less than a quarter of new mortgages in 2021 were to borrowers with credit scores under 720. Credit scores reflect family and personal wealth, which contributes to unfairness and damage. If you're affluent, getting a mortgage is easy, but if you're not, it's tough. Despite measures to prevent it, racial prejudice is nevertheless common in the mortgage sector. Denial rates for house purchase applications were 18.1% for Black applicants and 12.5% for Hispanic white applicants, compared to 6.9% for non-Hispanic white applicants and 9.7% for Asian applicants. Lenders might check a prospective home buyer's medical debt and student loan debt in relation to defaulted loans, limiting prospects for less established purchasers. Expecting communities who have never had financial freedoms to be financially secure while making a major purchase is like expecting an untrained athlete to win a national championship. It's unreasonable and has made home buying in the U.S. more difficult. Housing supply is the simplest method to fix the mortgage market. If we don't boost the availability of starter houses, first-time homes, and homes accessible to working families with low and moderate incomes, financing won't help. Housing must increase. More financing raises house prices without increasing supply. A mortgage market that serves all Americans is also crucial. If we have more supply, we should also focus on down payment assistance and believe we'll need more subsidies there, as well as financial counseling and preparation to help people clean up their credit and be loan ready. Several steps may be made to help subgroups overcome structural obstacles to home ownership. Our mortgage system must operate for today's economy and individuals doing the right thing by saving money. In today's economy, they're harsher. Our mortgage system must benefit individuals who follow the rules but can't move forward. If we want to overcome some of the systematic barriers to home ownership for households of color, we need to recognize that and think hard about unpacking those barriers and addressing them directly, such as looking for alternative ways to assess credit, counting income from gig economy jobs, second and third jobs, seasonal jobs, and other household members, and helping people build credit. To preserve the American dream, we must challenge and reform the mortgage system. Our mortgage system is a major determinant of financial stability, housing security, and prosperity. And despite the fact that it should be serving the whole country, it is not doing so. Therefore, unless there are very purposeful, big interventions and changes made in our system, we are going to look back in 20 years and discover that we are in an even worse condition than we were in 2022. I hope you liked and learned something from today's video. If you want to keep improving and being inspired, subscribe and press the bell button to be alerted whenever we upload a video. This has been Market Profits Institute.